may watch the recording much more later. So let us kickstart this webinar. You're welcome once again to this very Monday morning, this training. I want to thank you for coming once again, and I want to encourage you to keep attending classes because the key to your success is learning every single day. Successful people are learners. This market is just going crazy, bull. How many of us took yesterday trade for a buy? V75, how many of us took a buy? The last trade. Okay, nobody took the trade, okay. All right, so this is V75 because most of us are trading V75, so we are going to look at, I took sell, okay, I took sell, okay, good. So we are going to be looking at V75 and seeing how the market is going to, what we expect from the market today. Right. So trading is, I want to tell you one important thing about trading. Trading is about mindset, 70% mindset. 70% mindset. Trading is about 70% mindset. Please, can you all hear me? Is my voice clear, please? Okay, all right. So, very well, all right. So, trading is about mindset. So that's why I encourage you guys to always program your mind for success for this business. Always read those books I do send to you. The success in this business is about developing your mind or programming your mind for success. Those books you're reading are going to help you to always program your mind for success because the key to this business is your mindset. Some of us, after one loss, we have already given up. But successful people are people who don't quit. Napoleon Hill says, winners don't quit. If you want to win, you have to learn not to quit. It is not all the trades you take that may end up winning. So if you are trading and you don't make profit for that trade, that particular trade setup, that's okay. You can still try another one again. So the key is not quitting. The key is consistency. Some days you may have trades that will come your way that is not going to be a winner. But that shouldn't discourage you from trading or from, say, you want to continue with the program because success is about going from failure to failure. So read your books, keep your mind motivated every single day, listening to something positive every single day. Because without that motivation, I don't think, personally myself, I'll be doing what I'm doing because there are a lot of naysayers. People will always discourage you. This doesn't work. This is a lie. There is no money in trading. They will scam you and all these stories upon stories. But the key to your success is to forget about those things and keep yourself motivated every single day. If you're traveling with a vehicle, turn your car into a mobile seminar hall. This morning, I'm going to post some videos for you to be watching on that group. Turn your car into a mobile seminar hall by listening to something positive every single day. That will keep your mind. Our mind is like a garden. And if you don't deliberately clean your garden, all of us know that by default, we'll have garbage surround our garden. So your ability to constantly cleaning your garden, which is your mind, is very, very important with positive things, things that are not, because people, we are, because of what we think about, is why we have the result we have in our life. So your ability to constantly put in new ideas, information, positive words into your mind will help you to grow in whatever thing you're doing, including trading. So have the positive mindset. Don't have a never give up spirit. Tell yourself, I will do this. I will do this. If anybody can do it, I will do it. When a man said, I will do it or die, nothing can stop you. Trust me, nothing. You make it. So you also have to have your own positive habits, successful habits. The times you're using to be watching television, you can use it to educate yourself and to learn something very positive, like learning this skill. So after attending classes, it doesn't mean that your studies has ended. No. You have materials with you, read those materials. You have videos with you, watch those videos over and over. Those of you who are very new, repetition is the mother of all skill. The more you repeat, the more you get what you're studying. So repeat it over and over until you get it. You will learn it. There's not anybody cannot learn. You have an amazing, powerful brain that if you make use of the brain very well, there's nothing you cannot learn. So repeat it, repeat it, repeat it. Even if you don't understand yet, keep on repeating it until you understand it. Forex is complicated from the beginning, but if you don't give up, you'll make it. That's the secret about this business. All right, so let's go straight to the point. This morning, we are going to look at how this volatility index is going to give us what we are going to expect from the market today. And then we are going to, because this is an advanced class, this is for people who have already gone through the basics, people who understand how charts look like. Because in this class, we don't talk about candlesticks and we don't talk about what is a pip or what is a trend and all that. This is, I believe all of us that are here understand what is a pip and what is a lot. And we all know how to place a trade. And if you don't know how to do all that, that's the okay. You can still be here so that you can watch. And when you get to this class, you'll be more comfortable with it. All right, so this is an interactive session. We are going to analyze market together. This business is about analyzing market together. We are a family. We're a family, so let us analyze market together. So before you place a trade, you have a family that you are working with. That is the beauty of joining a club or an organization like this. Okay. So all right. So now, if you look at this volatility this morning now, this is what we call somebody said voice production is very poor. Is my voice production poor, please? Is it very poor, please? Please, class, is my voice clear? Okay, it's very clear. Frank, if the voice production is poor, it could be from your own end. Maybe you can check your network connection. maybe your network is not good. You may change your position to get a better network, maybe. All right. Now, yesterday, some of you saw the way I was doing buy signal, sell signal in the morning. In the morning, I was selling. Later, I was buying. Later, I closed my buys. Later, bought again like that. I was buying based on what I see on the chart. This is a daily. This is a 4-hour chart, and I'm going to use a 1-day chart now. If you look at this chart, this yellow line, I'm going to delete it now, and I'll roll it back again. All right. Now, if you look at this chart is on a very, let me bold it. This is a daily chart, and we look at how I drew this chart. This is where this market has been turning. This seems to be a mountain, these two zones. This zone up here and this zone down here. These two zones. Good morning, Mr. Robinson, you're welcome. These two zones seem to be very powerful, and market has been fluctuating in between these two zones. So if you know how to draw these zones correctly, you can easily make money. Look at this market. This market seems to be, this is a zone. This is a very tight zone. Look at this down here. That's why you can see the price turn from here as at this is October. This is October. Price turned from here earlier. Price went up, turned from here, came down again, turned. This was a fake out. This is where this is the zone. This is where we are, is the zone. Price is turning from here. It turned from here again. Price went up to this zone again. Price turned. You can see that this price is tight in between these two zones. In between these two zones, very, very tight. Very, very tight in between. So you can literally draw these zones very well, and you place your trade when you see a convincing candlestick or a retest. You make profit from this trade. Yesterday, after drawing these zones, I've been monitoring these zones for quite some time. Now, let me tell you the reason why I was taking trades here. I have a trend line drawn. Let me just show you what I have been doing with this trend line. Okay, now we'll go back to the lower time frame. Okay. You can see that my chart does not have indicators or anything, just trend line and probably horizontal lines. No charts. No what do you call it? Indicators. You see, you can, when you use a higher time frame to draw a zone, and you're seeing some kind of consolidation going on from a higher time frame, you can lower your time frame to take advantage of that consolidation and make profit out of it. If you look at the higher time frame does not show all these zones. These are minor zones. They are very important as well. They are called minor zones, but it was not shown. If you look at the daily time frame, you won't even find this zone. They are minor zones. You won't find them. So you can take advantage of the minor zones and also make profit while market is trapped in these minor zones. But these are the major turning points. This year, this one here, this one here, this one here is the major turning point. But when you go down to a lower time frame, you can also take advantage of those minor zones and make profit from those minor zones. So why was I placing those traders yesterday? The first one, I think it was here. The market got to this my trend line. I drew this trend line, and okay, this is a very minor zone. I discovered that I drew the trend line since, and this market has been respecting this trend line. So now when the price touches this place, right, as it touches this place, I know that the price will come down. I know because it's actually a downtrend. I know the price will come down. So I have to put my stop loss above this flash. I have to put my stop loss above it. And then the market actually came down, gave us some profits. That was yesterday. Then the other buy was when the market came down. When the market came down again to this particular yellow line that I placed that trade when I say everybody should buy. But there was one buy that we played that somebody said my stop loss was hit. It was this flash. It broke through the trend line. I mean the support zone. So you can take advantage of lower time frame to look at the minor zones. Minor zones. You look only at the major zone, but also sometimes we see that price is stuck between a minor zone, a zone. Somehow you can take advantage of that ranging to make profits out of the market. So with what we are seeing in the market today, I'm not going to look at this. What I'm saying is this daily time frame now or 4-hour time frame now. This is 4-hour time frame. So for volatility index, the best thing you should use is to use a higher time frame. Even any other currency, I advise people to use a higher time frame to draw your zones so that you know the major turning points. That is the key to success in trading. Use a higher time. Don't use 15 minutes to draw your zones. Don't even use 1 hour. Use 4-hour or daily time frame to draw your zones. When you use those time frames, the market respects, because the people that are doing this business is not you and I. You and I are just maybe 20% of the market. But the major players in this business are the financial institutions like the banks and even the governments. So those people are not looking at 1 hour time frame or 2-hour time frames. They are looking at daily time frame. They are looking at weekly time frame to play their trade. So it's their actions, what they do with their trade, that actually move the market. So if you want to make profit consistently from the market, you have to be using a higher time frame to draw your zones, not a lower time frame. Lower time frame, you can only use it to enter. You can use a higher time frame to draw your zones. Then maybe during the entering, you can use a lower time frame to enter. That is how you know the major zones. Then you also use lower time frame to draw some minor zones, like this place now. If you are seeing something like this place is a minor zone, but in the 4-hour chart, you may not understand that it's a zone. But if you go to, you can scalp with this. You can actually scalp with this. For scalpers, you can scalp with this. You can see that the price with the 15 minutes, 30 minutes is actually a zone. Look at how it looks like. So you can buy from the down, take your profit up. If you come down, you buy, take advantage of this movement and make profit before the market goes down. If it is downtrend, but you are taking advantage of this ranging movement, because market usually range for some time. It will do ping pong in a zone for some time before it will not tell you where it's going to, whether up or down. But always look at the chart with the daily time frame and know whether it is a downtrend. Once it is a downtrend, if you're stuck in a zone, do your trade more of the buying, of the selling. Take advantage of that minor zone, but be careful. Remember that it's a downtrend. So if you're buying from the down, you have to be watchful of how you allow your trade to stay, because if price turn, may hit you, and before you know, your buy will not succeed anymore because it is a downtrend. This is like this. It is down. It's going down. So you're buying fast and get out of the market. That's why I say get out as soon as possible, because I know we are buying against the trend because it is actually a down movement. But we are buying against the trend because of this ping pong that we saw in between this trend line and this yellow line. This touches. It was a ranging market. So we took advantage of the ranging market and made profit for ourselves that particular yesterday. So as I look at the chart right now, I'm seeing the chart is still going to, this is a bull candle. This candle, and it has touched our minor zone. It has touched our minor, excuse me, please, class. 1 minute. All right, so it has touched this our minor zone. It has touched this our minor zone, but I'm not still going to say you should enter the market now, except you have a very light stop loss. You have a very good account to maintain your stop loss, because if you put your stop loss here, you can survive and take advantage of the next movement, because I'm seeing this market to turn from here again to this upside, except something will happen that it will break through here. It could break through. It could do this. It could do this. It could do this and then do this. So it could break through this zone and then come here to retest this zone, this red line, then before coming down again. Let me draw it very correctly so we know what we're expecting from this zone. Let me remove this minor zone. This yellow line is the minor zone. Let me remove it. I'm actually on a buy, but I don't want to encourage some people to buy it now because my stop loss is wide, because I have a good account. My stop loss is actually here. All right, so if this happens, I know that I'm actually on a buy, but I don't want you to buy now based on maybe account. I don't want some people to say my stop loss, my account was closed because my account could not carry the pullback. So it could also come down from here. Maybe do this. And then do this. Oh. I'm not drawing it correctly. So what I'm trying to say here, markets can come down here, touch this zone. Then if you touch this zone for a retest, then show you a good, convincing candlestick pattern, then you can enter for a sell again. But generally speaking, for now, we're expecting market to respect this zone again and turn the upside, because if you look at the chart, it's an uptrend. If you look at the chart very well, it's an uptrend. It's an uptrend. It's an uptrend. What you are seeing here is what you call ranging. The market is stuck between these two zones. So it will give us, it will pay us if we look at it as a buying market than expecting the market to come down. So let's watch what will happen today for this particular uh, look at the buy. The market is still forming. See, trading is not something that you have to learn everything. Like I keep saying, just master one thing in trading, and you will see that your profit will count every single day. This trade, I mean, in profit anyway, small profit now, because the market has started turning back. So, seeing what happened here, before it turned from here, look at it. After this red candlestick, this what they call kangaroo tail or hammer formed, price move up. So let's watch this candlestick today. It could turn from, it will move straight or up again, then come back. If you are going to use a 4-hour candlestick, even in the 4-hour candlestick, it's giving us a very bullish engulfing. If you are very aggressive, you can enter this market with this candlestick. And if you have a good account to maintain the stop loss, you can see enter, you will still have a better chance of taking quick profit. Because this seems to be an engulfing candlestick, this 4 hours. After the end of these 4 hours, if you're aggressive, you can still take a buy. Or you allow this market to come down here. Two things here. You allow this price to come again for a retest on this zone. For a retest, then we buy. Sorry. We'll buy our no. Me, I'm not a friend to this particular chart. I prefer trading view to this. Trading view is more flexible. Let me delete all this so we can. All right. See this aggressive candlestick, and this is a zone. This shows that the market may also turn from here. So after this candlestick, some of you are aggressive who really want to take that risk and buy this market. It pays, but if you want to be very, very conservative, you can just wait for the price to do this. Maybe touching this trend line, maybe touching there, and then come back for this zone. After this down, if it does this again, you can buy. All right, I didn't draw it correctly, but after the market, because market may touch this trend line, it may respect this trend line. After touching this trend line, if it pulled back again, I can bet you the price will likely go down from there. So this is the zone, this is the turning point. So you can allow it to go. No problem. If you're not aggressive, you can allow it to go. If you're aggressive, you can still buy, but your stop loss must be down. Your stop loss must be down here. So that in case of any flash move, price may decide to come down and wipe you out if you don't put your stop loss down, a little bit down before going up. So if you're aggressive, after this candlestick formation, you can take a buy for this volatility index. So if you have your MetaTrader 5, use a 4-hour candle, a 4-hour time frame to check this candlestick. Once it is closed and price you can put a buy stop. You can put a buy stop, but your stop loss should be down because price may come back. But if you are not aggressive, allow the price to come down. Me, I wanted to give this signal when the price comes down for a test. So you can still wait for a test. You can still wait for a retest, but this price will come back before it to move up again. Then you can still take a buy from there. So this is how we are seeing volatility index for now. Anybody wants to say anything about this particular analysis? You have any contrary view? Because we are learning. Volatility index, this is what? Mr. Robinson, do you have anything to contribute on this? Okay, Mr. Robinson, you want to talk? Okay, let me allow you to speak. Okay, go ahead, Mr. Robinson.
Yeah, good morning, Honorable, and good morning, everybody.
Good morning, Mr. Robinson.
I have not been hearing you since I just discovered that it's a fault from my end. So I just worked on it now. So for the first time, I can hear you now.
Oh, great. Thank God.
Yeah,
Thank God for
that. The first time. Yeah. Okay. That's all. Thank you.
All right.
Yes, sir.
So, anybody have a contrary view? Anybody can want to contribute or ask a question on this, our analysis? Because we are trading with our money, so we have to be very, very careful and know what you're doing before we place a trade. What I was saying is that this seems to be a bullish engulfing. You can see this is a smaller candlestick and this is a big candlestick. All right. So if this candlestick ends like this, based on the past history, if it ends like this, because market is history. Look at what happened before price did this. Look at this plate here. Before price did this, look at here. Price did this, and then price went all the way to this up. Look at this same thing. Now it is repeating itself again. But for this summer for this, it went down here, it went up first. After coming down, it came down here. This is a flash. But it went up a little bit, came back here for a retest, then did this. So if you want to be conservative, you can wait for the retest to happen. But this one is very, very tempting. This is what you call as bullish engulfing. This is what you call bullish engulfing. If this candlestick ends like this, it is tempted to take it as a buy stop ahead of the candlestick, the buy stop. But your stop loss must be down below the zone, so that in case the price comes for a retest, you can be safe. But if you also have good account, if your account is small, it may not survive the retest. So if you don't have an account, I will advise, if your account is not big, I will advise you to just wait for the retest. Wait for the retest to happen. Once the retest happens, we can take the trade. But those who have good accounts can actually take a try because it's a bullish engulfing and it shows that the market will go up from there. All right. I'm still having Austin wants to speak. Okay. Austin, you have. Please, anybody wants to ask any question on this, our analysis on volatility index? Okay, somebody said unmute me. Okay. Robinson, I've already done that. actually say like how much that can withstand is good amount. Like this in my own opinion, that is a wide stop loss, and this is a higher time frame. So I think if you have 300, $400, you can withstand that pullback. That's why if you don't have good capital to trade volatility index, sometimes some stop loss may be wide. So you enjoy this trade volatility index when you have good capital. If you don't have good capital, you may just be trading the time the market is about to move. That is, you are sure of that time. That is, there should be no pullback. Do you understand me? There should be no pullback. You know that the market is just going straight because market usually have a pullback. So if your capital is small, 50, 100, if it is too small to withstand this pullback, you may think you are losing money. You don't have the right analysis, or uh, maybe I have sent a wrong signal. But the signal is good, but it is your account that is not good for the signal. All right. So some of us who want to trade volatility index, my advice is look for capital, learn the scale very well, have patience with yourself. Don't be in a hurry to make money from the market so that you don't lose the small capital that you have to do other things. So you can start a small capital with forex while you wait for capital to come in so that you will enjoy. If you have good capital to do this volatility, you will make profit, you enjoy it. You won't be scared. Because after all, you are in this academy and we are going to direct you, guide you, and also be with you. But small capital will not withstand some kind of retracement or pullback. Okay, somebody said, which time frame do you use, do you analysis, and which do you take a trade? Okay, a better analysis to use is the higher time frame. Higher time frame, like 1 day. I use 1 day to look at the market, and then I'll now sometimes bring it down to 4 hour to look at it in that 4 hour angle. Then sometimes I can take my trade with 1 hour time frame. After the end of that candlestick formation, I can take that trade. Somebody said, can we, so what's the major difference between this and forex? This is very fast. This one is very fast. That's why it's called volatility. It is very fast and volatile. So forex is fast too, but it's not as fast as this. Forex is, you can control it, it's easier, but this 75, especially. We have other indices that are not fast as this, but okay, please, can you hear me now clearly? Okay, it was Oh, Julius, you can draw support and resistance. Fine. Good, good, good. Shoma, I think now you can hear me better. Is it not better? Okay. All right. Victor, you can hear me right now. Okay. That means everything is okay now. Now we can go to Forex and see what is going to happen in the market. We are going to discuss about trend. Good morning. Good morning, Victor. Good Lord, you cannot draw support and resistance line. You can learn. You can draw it again. That book I sent on the group, Naked Forest. Please, I want to encourage you once again here tonight, this morning, to read that book. That book is a bomb. If you read that book I've read that book over 20 times. That book helped me to understand the trading, understand the meaning of price action, trading without indicator. You can see my screen, there's no indicator. There's no need for indicator. Just know these major turning points and then learn how to draw it. Then you are done with as a naked trader. You know, as a naked trader would place our trade when price touches a zone. That's why some days you may not have trade opportunity. If you're having, good morning, Mr. Cyprian. If you're having trade opportunity every day, it means that you are not drawing your zones correctly. Use daily time frames to draw your zones, then watch out for trade opportunities. You don't trade every single day. When market touches those zones, that's when you place your trade. So let us look at Forex charts. For now, do we have anything as we speak about volatility index? Like I said, after the closure of this candlestick, if you're aggressive, but if you're not aggressive, let's wait for a retest so that those of us who have small accounts can survive this. Let us wait for a retest. A retest can happen. If a retest comes, because this is just the first movement according to the 4-hour time frame. But the 4-hour time frame is usually better than the smaller time frames. Okay, Sherman wants to ask. Austin wants to ask. Okay, let me put your on mute, Austin. All right, Austin, go ahead and ask your question.
Hello, good morning, everyone.
Good morning.
Okay, sir, I just wanted to confirm, yesterday I told you that I had a $50 that I wanted to use to trade volatility.
Please, can you be audible a little bit?
Hello, I said yesterday, I had a $50 that I wanted to use to trade volatility index, and I was advised not to do so. Now, along the line, over the night, I was monitoring the trade, and I saw that this trade was just going up and down. And of course, I ventured into it, and I got close to $100 out of it from night to this morning. Now, this is what I'm asking. Is it okay to scrap on volatility index, or must we always wait to be sure that this trade will go on? If we notice that this trade goes up and down on a particular trend, is it okay to enter scrapping some dollars and then move out?
Okay, to scalp and then get out.
Yeah, just to enter, like scratch some dollars as it goes up and down. You're like monitoring it, you scrap some out and then you go out. Is it okay like that? Or must we always wait for when we are sure that this trade is going up and up?
Okay, yes, if your account is not big, you are just scalping with that $50. You have to be very sure that it's going to, when you are placing a trade, you have to make sure that it's going to go up straight. It's not going to come back a little bit first. Because the problem with a small account is that sometimes market may go your direction, but it comes down for a while, then before zoom off again. So if your stop loss is there and maybe even safe, they even put stop loss is even difficult with small account because maybe your stop loss too cannot withstand the account you have. So you have to be sure before you can place a buy so that the market has to be going up immediately from where you are buying from. So small account, be sure so that you don't lose that small money that you have. That's what I advise. But people have grown from small to big like that. But volatility is somehow for you to be sure. You have to be very sure before you can place trade with small account. That's what I mean.
Okay, sir. Okay, sir. Thank you, sir.
All right. Julius, we lock profit. Okay. Okay. Victor, Julius, we are going to talk about that now. I have a question, Victor Ude. Okay, Victor, let me. Right. Okay, you can speak now, Victor.
Okay, good morning, sir.
Good morning, Victor.
Can you hear me?
Yes, I can hear you.
Good morning.
Good morning. How are you?
Okay, this particular, I'm fine, thank you, sir.
Hello?
Yeah, I said this particular trade, the particular one that you're trading now, must we wait for the breakout?
This one is not. We are expecting
Wait a breakout trade.
this particular volatility index that is on right now. Hello? Hello, Victor. Okay, Victor, it seems your network is really bad. But if I hear you correct, if I hear you correctly, you're talking about breakout, all right? In my own opinion, let's not mind this movement first. This might be a flash, a trap for some of us that has small account. For someone who has a big account, you can take the risk and put your stop loss down here. For a big account, you can take the risk and put your stop loss down here. But for small account, wait first. Let this flash go first. Let it go. Let it come down. This is 4-hour candlestick. We are not looking at 15 minutes. 15 minutes will tell you that it's an uptrend already. But 15 minutes is lying. It's not 15 minutes lies. So you leave the 15 minutes. You look at these 4 hours like this. Let it come down to this red zone again for a retest. Let it come down before we can place a buy. But if you're using a big account, you can contest this, quickly take your profit before maybe at the end of this trend line. But it's already showing sign of retracement, so we can allow the market to come back and do this touching. Then after touching here, it gives you another candlestick. That means we are going to place a buy, and now we have more confidence in the trade. I have been waiting for this trade, but I don't want to be in a hurry to direct everybody to buy. And I'm going to close my buy. I have a buy position, which is about 129 profit, but I'm going to close it very soon and wait for a pullback to happen before I will start buying again.
Sir, can you hear me?
All right, Victor, I've heard you. Okay. Victor, do you still have something to say?
Yes, I still have something to say.
Okay.
Yeah. So, how do I know that it will soon come down very soon? The candlestick. How do I know that it will come down? I mean the candlestick.
Why did I say it will come down very soon?
It will still come down.
Well, it will, because of the history. The movement is
like, why do you say that it will come down?
Why did I say that it will come down, right? Well, Victor, why I said that it will come down is because of the history.
Why you say
Market,
it will come down?
eh? Victor, I will suggest you type because it seems I don't know if I'm the only one not hearing you clearly, but from my own end,
Network.
it's breaking. Victor, I think you should type. Okay, Victor there. Austin, you have something to say, Austin? Okay, Austin, you have your mic to you now to talk. Okay, Shoma, I'll get back. I will come back to you, of course. Okay, Victor, you said, how do I know that it will come down? Yes, because of history. The market is history, is memory. People are watching this zone. Everybody. It's not just you, everybody is watching this zone. So let me even remove these things I've drawn so far. Now, people are reacting to what they know happened in the past. That is memory. Trades is human beings that are trading this market. It's not robots, it's human beings like you. And they are all watching these charts. Professional traders look at higher time frames to look at their charts. So as you are drawing your trend line, you are drawing your support and resistance line and all the rest. Those some of them are using indicators and all the rest. So they are watching this zone. Look at this zone. Price reacted before. Look at what happened. Price went up. Look at price came down here. This was a fake out. This is what they call fake out. Price came down here to this zone. Immediately after coming down here, look at what happened. It went up as if it was going up, but it came down. All right. After coming down, then another, this is 4-hour candlestick, right? Another candlestick now formed. This forming now, it gives you VIA. So now, if you are in this trade now, what you'll be doing, somebody asked me of trading exit. What you'll be doing is now to trade your exit. If you enter this trade from this angle, this green candlestick, after this green candlestick, allow this your any time frame you are monitoring. Before you take your trade, allow that time frame to finish forming. If it is 4 hour, allow the 4-hour time frame to close. So after closing, if you have taken this trade and your profit is up to this level, you can now use your laptop or whatever thing you're using to monitor your price to say, okay, since price is here, your stop loss initially was down here, maybe. Your stop loss was down here. Now, price has taken you from this point to maybe this point, or even this point. For you to lock your profit, after you achieve this, your first result, or maybe you can now remove your stop loss from your initial entry point to maybe maybe a little bit after your entry, so that you still have profit in case price retraces down to your entry, near your entry point, you still make profit. So you had entered here and price are giving this level. Your stop loss can be moved from this down to somewhere here where you must have made some profit. So that in case price reverses entirely, that is, if you don't have a take profit target, you can be in the trend, monitoring the trend. If price moves up to the next the next line, you still move your stop loss to the second stop loss. If price move up here, you move your stop loss to this next one. If price move up here, you move your stop loss to this next one. So that's how you trail your exit, so that you can go home with a good money while you are following the trend with a trailing exit. That's it. So Shema asked, Shema, I'm going to allow you to speak. Maybe you can speak. Okay. Shoma, you can speak. Hello?
Hello? Hello, sir.
Yes, go ahead. Good morning.
I have typed it. I have typed it. I said
Okay.
I want to type.
Okay.
I have typed the question. Check.
Okay. All right. All right. Shoma, you're asking. Okay, forex and volatility index. Well, forex is currency pair, but up to now, this volatility indices is like a trade where they monitor the movement of stocks. That's what I read about volatility indices. And the difference is that they are not traded, they are traded every single day. That's why we could trade it even yesterday. So forex is only weekends and weekdays. Forex, the news can move the forex market, but for volatility indices, news does not move it. It goes down. Just technical analysis. So that's just the difference about it. Forex is fundamental controls, has a way to affect the forex market, but volatility fundamentals does not have any effect on it. Okay, somebody said, so that means before 2 p.m. the candlestick will. Okay, Victor, yes, I think so. If you're using 4 hours candlestick, is it up to 2 p.m.? Let me check. This, I don't know, this is my time frame. This seems to be, this is the 4 o'clock candlestick. Is 4 o'clock, or this time zone is not correct? This candlestick should be 6 o'clock. This candlestick should be 6 o'clock. So whenever the candlestick finish, if you're aggressive, you can place a buy, but I suggest that you allow the pullback to happen. But may just touch this trend line and then a pull back again. So if you're buying, you may not make much profit. So allow the pullback to come first, because the market may come back and retest. People are still selling. People may still be selling again. So let's wait for this pullback to happen. Let's not be in a hurry and make this money. I'm going to close my trade. I'm going to close my trade very soon. Okay, Victor, you're finding it difficult. Okay, we are. That's why we are here. We are going to draw it as. This is very. If all of you here, I can quote me anywhere in the world. If you can learn, because some people say I know what is support and resistance, but it's not just you know it, but are you drawing it correctly? Are you drawing it correctly? That is the most important thing in drawing support and resistance line. And if you are drawing it correctly and you know these major turning points, these zones, trust me, you are past 60% of your journey in forex. Ask me, quote me anywhere, I will speak in that direction. If you can draw it correctly as a naked trader, you don't have to trade with indicators. Just draw these things correctly and look out for possible trade setup on these zones. Trust me, you won't be bothering yourself waiting for candles indicators to give you direction or waiting for me to give you signals again. Just draw it correctly. We'll get there. And another secret about trading support and resistance, let me tell you one thing. Support and resistance. Yeah, Cyprian, this is bullish engulfing. This is bullish engulfing. I agree with you. This is a buy signal. But I want this price to return. All right? I want this thing to have a retest first. After the retest, that's when I think we should enter. It's a bullish engulfing candlestick. I'm already in profit in but this trade, I took it in the night because it was very late in the night. I just discovered something and then I woke up and I thought I took it. So I'm going to quit very soon because it will soon touch my trend line. It will soon touch my trend line. So I'm going to quit very soon because this market will come down for a retest. It will. Even if it goes up, let it go first. In my own opinion, let it come back and do a retest. You can be aggressive and make profit too. Then you can make profit, but you'll be more relaxed if you come for a retest before going up. That's what I mean. Okay, Robinson. Okay, in case it does not retest, yes. If in case it does not retest, that means the market has gone up. If you move up, it did not come down to this point again. If you just pull back, I mean, the trend has started in a 4-hour chart. You can follow the trend and keep going. Even if it's not going to retest, even if it's not going to retest, it will do this. First, you can place a buy then. If you want to wait for, if it can do this, two things can happen here. Price can go like this. Let me delay this. Okay, price can just move here, right? Yeah. But anyhow it be, price does not move like that. There must be a pullback. A pullback may pull back to even this trend line. A pullback will even come to this trend line before another one. Before another one can now, once they see another candlestick going, you can buy the retest. Or it will go up here, come down to the retest here, or break through this zone, this trend line. You can break through this trend line, come back and retest it, then before going up. Or it will come back to this zone and do a retest. We're expecting two things to happen there. So you may jump in and enter. It's very, very, it pays too, but it's aggressive. If you don't have, if there is a good capital to withstand the pullback, that's okay. That's okay. If there's pullback, you can put your stop loss down here because you're looking at a very long trend. Your stop loss could be here. Look at this flash. This year stop loss should be. So if you are entering here, if you allow the retest to happen and enter here, you have a smaller stop loss. But entering this side, if you don't have a good capital to withstand the retest, in case retest happen, except you just enter and they watch a chart for a few minutes, maybe like few times, see what happens, collect your money, sharp, and get out of the market, sharp. It can still pay you, of course. Okay, Victor said if he breaks, no, if he breaks, you can't buy. If he breaks, it has to come back and retest before you can buy. If you break, you can buy. If you go up, if you break and you buy, it may just deceive you and then come back again. So the best thing, in my own opinion, is to allow this thing to come back to this zone. Me, I'm going to close my buy after now. It has gone to 230. Look at this is profit, but I'm going to close it after now because it's going to come back for a retest. I know that it will come back for a retest. It will come back for a retest before final movement. Before final movement will happen. So let us look at currency pairs. So why don't we sell as it pulls back? Okay, well, that is still okay. If you touch this trend line, that is what you call trading with the channel. That's channel. Let me even draw the channel now. There's a channel here that is here. This is the channel now. Okay. Now, if it touches this place now, it's going to touch the trend line soon for profit. It has gone to, the thing is just going aggressively. After touching this trend line, it may show sign of coming down to this zone. So you can use maybe a smaller time frame, like to monitor what is happening on that channel. You can use a smaller time frame, like maybe 1 hour. You can see. You see, maybe you can use a smaller time frame, like 1 hour, to risk trading that channel. It's already there. You see, market have been doing ping pong on these on this channel. Look at it. So people trade against the trend. Some people can buy from here. Look at we've been buying. Let's do bought now from here, sold from up. So this is the channel. Price may make sign of coming down after touching this trend line. Trust me, it will happen. So you can risk it and sell with a smaller time frame. Check it, enter with a smaller time frame, and collect the profit here when it's going to come back for a retest before you now be preparing for a major buy that will happen. All right. I think let's talk about currency pairs. Let's analyze currency pairs. How many of us are trading Euro USD? How many of us took Euro USD last week trade? How many of us took Euro USD? Okay, Shomasa didn't. Okay. So almost all of you did not take that trade. All right. So you guys have missed that trade like that. We are going to sell at is buying. Yes, we'll place a buy. That I send that signal on the group for a buy. So for me, I'm in profit in that trade. The USD card was selling. It's going to touch the trend line. Let's see what is going to happen right now. Let me tell you that this thing works. Learn how to draw trend line. Learn how to draw your zones to accelerate your learning. All right. So let us see how this candlestick is behaving now. Okay. Now it's touching the trend line. You can see that it has touched the trend line. You can see that it has touched the trend. Okay, almost touching it. Sometimes it may not touch the line, but it's a zone, so it must not be a clean touch. It could be a near touch or a little bit above touch, above the line. Look at what is look at this. If you look at the Toshi there, now it has showing sign of retracement. My money was 270, now it has reduced to 230. You can see they have started reducing. So if you are buying now, because of this thing, this trend line that is here is a little bit aggressive. So I would suggest you allow the pullback to happen. It's going to come back. This is 1 hour time frame, right? Now we expect the price. Oh. We expect the price to do this. To do this. And then this. Okay, I guess you understand what I'm trying to do here. If it's a trading view, I will do it better than this. So we expect the price to come down here and then turn back for a bullish formation. Then we can maybe after touching down like this, if it gives us something like this again, this kind of this kind of candlestick, we are going to place a buy. That is, we are going to place a buy. No doubt, we are going to place a buy. Or it can break through this zone. If it breaks through this particular trend line and come back to retest for this trend line, don't just buy because it's going up, 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 up. You may be trapped, especially if you don't have capital to maintain to hold your stop loss. Don't just allow it, don't enter buy. Allow the thing to retrace back. Even if you're going to buy with this 1 hour candlestick, all right? Allow some red to come back first. Don't buy, this could be a fake out. Allow this some red to come back first. After some reds come back and then bullish, blue, green show again, then you can answer, okay, it's a buy. Let's go. Okay, Robis, you have something to say? Your hands are up. Let me unmute you. Okay, Mr. Robinson. Okay, do you have something to say?
No. I didn't. Did I raise my hand?
Yes, you did.
Uh-oh. Maybe I mistakenly touched that.
Oh, okay.
All right.
All right. So it's showing us is going, but jumping into the going is very, very risky. Allow a pullback to happen before we have a confirmation. That's our confirmation that the market may be going, of course. Yes, it's on record, of course. Euro US is buying, yes. Okay, let's look at currency pairs for today. So this is trading view. This is how you can, this is trading view. And this is Euro USD. Euro USD is on a 4 hour, 1 day chart. We placed a buy when it was here. That was where we bought that day. And we have made close to how many pips? A lot of you bought. Those of you who bought, we place a buy from here. Okay, we're in 30 something pips. Okay. We're even going to exit this trade because it's now approaching our line. It has even touched our zone. So if you're buying, you may use that, close it for now. Because let's look at the 4 hour chart anyway. You see, it has touched our zone. Maybe it will come back for a while before it will do this. It will do this, then this. For that particular currency pair. So this is Euro USD. Let's watch out. Let's just see what goes. It's going to touch this zone. Let's see how. Let's collect our profit on this zone. Let's not panic yet. Let's just wait and collect our profit there, even though we are scared of losing our profits. I believe it's going to touch this. It's going to come up here before it will finally pull back. So there's one thing I want you to know. If you are trading, so this is USD. We are in this trade. So if you see a pullback, you can maybe decide to buy. If you see a pullback, this is 4 hour candle. Let's see the 2 hours candlestick, 2 hours chart. Okay, is it clear? If somebody had entered from here, it pulled back. Somebody had entered after this candlestick, the person would have made profit. So it's pulling back again. If you have not entered after this according to this 2 hours candlestick, if you are using 2 hours candlestick, after this pullback ends, if it gives another bullish candlestick, you can take a buy. You win. Down, you win. So this is for Euro USD. Is a pullback. This is not reversal. There are difference between reversal and pullback. Pullback is just a temporary movement of the market, but reversal meaning that the market has gone far, is going back to the next direction, maybe trending downwards. So we're expecting this market to just have a pullback. No, John, I'm not using TradingView on binary.com. Somebody said you can use TradingView on binary.com, but I've not tried it. Let's see that thing they said. I've not tried it. Binary. I saw that thing somewhere. Is it on that chart? Binary. Binary. I'm seeing binary volatility. I wish I can use TradingView to analyze binary option. Binary and this volatility it will be very easy, so that we can monitor our charts even. But somebody said it's possible. I've not tried it before. So for those of you who are still new to TradingView, let's look at these things first. USD card. Okay, we were selling this USD card. It was on the sale, we sold. This thing is still coming, it's still going to come down. This is a temporary movement, it's still going to come down. It's still going to come down. Then Euro JPY2, we are on Euro JPY. Today is the beginning of the market of the. Okay, we are on a buy. Euro JPY2, we are on a buy. You see, this was a pullback. After this pullback, this market, if somebody has placed a trade, the person would have made profit. So we use daily to look at the direction of the market. Now we are expected to take our profit on this zone. On this zone. See, these zones are always respected. Look at it. Look at it. Look at it. Market went up here, touched down here, bounced back. It went up here, touched down here, bounced back again. You see, these zones are always respected. Now, let me tell you one thing. Those of you who are not using, we are trading US dollar. Always come here to check dollars index, DSY. Dollars index. All right. Now, this is dollars index chart. if you are trading with the US dollar, if dollar index is falling, it means that if you are trading Euro USD will be going up. Somebody said you are using trading view on binary for forex. We have trading view on binary. Can we use to? Yes, if there is trading view on binary, I've not seen it. Okay, probably is binary.com/trading view. Okay, binary.com/trading view. Okay, let's check it. So this is a uh, this is dollar index. If you are trading any currency pair that has to do with dollar, always have your support and resistance lines drawn or trend line drawn on this particular dollar index because it works. If this thing gets to a resistance, it means that dollar has overgrown. It's going to fall soon. So if you see a good candlestick formation forming here, people are going to be selling off their dollar because everybody is watching this market. Professionals use this in this particular chart to learn to understand the movement of dollar. So if dollar is falling, if it has gone to that, if it has gone to that particular resistance zone, it means that dollar is going to be falling. So you are going to be looking at buying your Euro USD because dollar is the base. I mean, Euro is the base currency. So Euro USD is going to be appreciated if dollar is going down. But if you are trading USD card, it means that USD card is going to be a sell because dollar is actually falling. So take note of this thing. It's on your trading view with your phone. Check out for DSY, and then you can be monitoring your charts based on what is happening with the dollar because most people like trade dollar. Me, I like trading currency pair that has to do with dollar. Okay, GBP CHF. Okay, we are going to look at it. GBP CHF. Let me try what they say about this. This is what I'm seeing. Oops, not available. Wow. It's not available. Okay. So let's leave it for now. So this is dollar index. Take note of it. Euro USD is going to be a buy. So let's look at GBP CHF. Oh, this is an uptrend that is very is an uptrend. A clear uptrend, but it's coming to an end. This seems to be a zone now. See, it's a zone. Now, for you to confirm this zone, you just go back. Just go back. You see? Look at, I told you support can become resistance as well. And resistance can become support. Before, look at what happened. Price broke through the zone, came back for a retest. Same price came here, went up again. Came here for a retest before taking off again. You see? You see? Price came all the way. Price came all the way. Then for the test, now it has dropped again. Went up now, is here now ranging. So now, if you are trading this pair, if you are buying, you have to, for now, go out of your buy for now. For now, the price is ranging. It's on a zone that is trapped now. It's on a zone that is trapped now. So you are going to exit the market at the moment until things are okay again. Two things can happen that will make you enter the trade. Two things can happen. Price can range, breakthrough. Allow the breakthrough to go up, then come down. Then like this, you buy. See, there's one mistake people make that about breakout. If a breakout is just one or two candlesticks, it's not a good breakout. A breakout must be like this, like what you're seeing here now. Like this was a good breakout. It went off, came down near the zone before it went up. But don't just say only two candlesticks and it's a market breakout and came back. No. The breakout has to be a good breakout. So if price go up like this, or even further self, right? Then you like this is a good one. It means that it's going to continue the up. But if from here, if it does this, come down here, does this, it's going to be a sell. Take your profit in this next zone. This seems to be the next zone. Let's confirm it. So once you are comfortable drawing these zones, you will not be looking for trade. You will not be worried about trade. Look at, you see, it's history. Look at, here it was a resistance, right? Here it was a support. Here it was a support. But here it was a resistance. This is GBP You look at their news small, you look at the news, watch and listen to Bloomberg and know what is happening about the Brexit matter. You just read some news, before you know it, you are trading along with this your look at touches. These are 3 zones. Let's click here. Trading is not complicated as people think. People think they have to know everything, like a sign, like a special science behind trading. No, it's not a science thing. It's easy trading. We call this one easy trading. You don't need that scientific method of analyzing markets. No. Do this very well. Add it with your, look at I use this other side, I cut some wicks. Okay, this side is the body, all right? The body. Because it's not a straight line, it's a zoom. So all these things make it a zoom. Make it a zoom. You can even use use this to, yeah, this is the zoom. It's a zoom. It's not a straight line. It's a zone. All right. Once you've gotten these zones, you have, once you are comfortable drawing these zones, trust me, you have done, add it with your news, watch your forex calendar. All right. So these are the zones. If you are buying this market, hold on, let the breakout happen. Let the breakout happen, then you can make a decision. All right. I think we have gone very far. This is about what is your take profit on VS75. Okay, the market is dropping. Sorry, you can try this. Okay, Robinson. Okay, this is 75. Okay. Now, how do you get the 75? 75. It's not coming up. It's not coming up. So, this is what I was telling you. If someone was buying, look at what is happening right now. The market is dropping now. See? Because it has gone to the trend line. It must not touch, but it has gone there and it's dropping. You see how the market would have tricked. My money was $300. Since all this I was talking with it was $300, but that night has reduced to $141. You see how this market can trick you. And I'm going to close my trade for now. Because this market is very, very funny. So that's why I said you can wait for the retest to happen before you place your trade. Look at what is happening now. It's coming back. It's coming back. So that is it. So this trade, wait for what is going to happen. Let me remove, wait for those lines to break out before you place your trade. Let it break out from this zone. You're on this zone. Let a breakout happen, or let this pullback happen as well. All right. Do we have any other thing to talk? Because we have really gone fast. So people who are going to work can go back to work. So we have come to the end of today's training, and I want to congratulate you, those people who is joining us for the first time. If you are joining us for the first time, type first time. Okay, John, okay. For the first time, John, okay. Okay, so okay. First time, all right. But I came late, John, okay, it's okay. You watched the recorded video on the group. Okay, Victor, all right, first time, okay. You're welcome, Victor. Those of you who are in Port Harcourt, who are in Abuja, I will be coming to Abuja on Wednesday. So if you want to meet me, so we can do this thing one-on-one, I'll be in Abuja on Wednesday afternoon. So we can meet in Abuja. If you're in Abuja, we can meet. I like to meet with my people one-on-one. For instance, John is here with me. Victor Abari is here with me. Victor came all the way from Enugu to Port Harcourt. We are here in Port Harcourt. And that's how serious somebody wants to acquire knowledge. Victor, you're welcome to the academy. Somebody said, I hope we shall be expecting signals. Of course, we shall wait for what is happening. Oh, this is serious. This is serious. You can see what is happening. See what I was telling you. My profit has been wiped to just $60. Look, guys, just look what is happening. I think I'm going to close this trade now before everything will be gone. This training has, you see what I was telling you guys? If you had jumped in, buy, something would have happened. Something would have happened. So always pullback will happen. Pullback will come before you buy. Allow the pullback to happen before you buy. When you come to worry. Okay, I don't know yet, but I'll come to worry. Of course. All right, so we have come to the end of this class. Please read your books, read something positive, motivate yourself every single day. Your mind is very powerful, it's the most powerful tool you have. So make use of your mind by investing on your mind every single day. Read Naked Forex, read Ultimate Guide to Trading. Those books will help you to accelerate your learning. So thank you for coming. And If you want to rewatch this video, you can always rewatch it. I'll post it on the group later in the day. So have a great Monday. Have a great Monday. If signal comes, we are already in trades. We are already in trade now, so we cannot be double trading like that. Okay, somebody said, can we sell now? Well, Victor, let's not be in a hurry to trade this thing, because this thing is very, 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 very funny. You can't, let's watch what is going to happen before we talk about selling. Let's just wait. Let's wait. Let's wait. This is on a channel. I understand it could give us a sell to this yellow point, but let's just wait. In my own opinion, let's just wait for this buy. Don't be in a hurry to make money in this business. Let's just wait first, so that we can be sure this market is going to turn soon. So selling now. It may come down here, but let's just wait and see what happens. All right. Shama, you said what? Okay, so I should remove the trend line. Let me remove all these things so you can see what is happening. Okay. So you can see what is happening. What is happening? What is happening? Well, let's just see what happens. So, all right. It may come down to this place, but let's wait. I think we should wait for the buy instead of rushing for the sell. We should wait for the buy. We should wait for the buy, but the buy is going to give us a better opportunity than the sell. All right, so of course, when the buy signal comes, I'll drop it on the group. When the buy signal comes, it will be dropped on the group. That line is not, Chama, that line is a trade. Whenever you place a trade, it will automatically give you a line like this. That is the entry price. That's where I entered for a buy. Okay, if you want to see the candles, let me just blow it up. You see? This could also be a trap for a pullback for a buy. So let's not be in a hurry to sell this market. This market is a bullish. The market is about to go up. So let's not think about selling now. Let's wait for the buy, not sell. We shouldn't sell this market. Let's not sell. This market should stop. Let's wait for a buy. Either we'll buy from this down, or if it comes down a little bit, give us an indication that it's going up, we'll buy. Put our stop loss down. That's all. So let's stop selling now. It's too late. It's too risky to sell at the moment. All right. So have a good day. Thank you. See you tomorrow. See you tomorrow, 7:30 a.m. again. Bye-bye.